Should we buy or sell this nanotechnology ETF? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So nanotechnology, it's in the basic materials sector, and we can see that it is actually at the 52-week low, so minus 35-ish% from the highs. So here is the chart. The ETF is from ProShares, and the ticker is tiny. So the reason why this ETF is interesting is that we are at some kind of low here. Does this mean that this is the ultimate low for this ETF? Obviously, it doesn't mean that. It means that there is something afoot around here. It seems to be a floor where buyers step in. Looking at the daily data points, when we start counting, we could say 1, 2, and 3. So you could make a pretty strong case that this is a triple bottom. We don't know yet whether it will move up, but we do know that quite clearly there is some kind of floor at this level. If you look at this candlestick here on the 1st of September, there was a bit of a flood of buyers coming in here. So there are some bigger players protecting these lows. Looking at these other indicators, we do have very little data, so we have to go to the dailies. When we look here at the RSI, we can see that we are at RSI support. The previous time we had this exact RSI was back here. And in that case, we got a bounce, but the bounce is bullish. I mean, this bounce was, approaching 8%. That's pretty good. Also back here as well, we also got a bounce at these levels on the RSI. If we measure, in this case, we did have a double bottom, and you got a 15% rally, which is pretty decent. Looking at the PPOs, we are clearly at levels that have a tendency to create lows. So this is technically interesting. So I give the technicals a 7. That 7 is contingent on this triple bottom. If we were to close below the floor of the triple bottom, that obviously would be a pretty bad thing. So yes, but currently we do have a good setup that the bulls should use. So this is the seasonality data we have, and we don't have much. So to the right, we have no data. To the left, we do have a bit. Yeah, we have some data from last year. We see that the September, it's a weak month. October, November, looking at the percentage moves, they are sizable. So, we can't really jump to a conclusion based on subtle little data. But the data we do have is not really favorable to bearish trades, because maybe there is something about October and November. Maybe there are certain conferences in the nanotech sector. Who knows? I mean, there could be some good reasons why there is strength there. I give the bulls a 2 here on the seasonality. So September is not a strong month, but the coming months are potentially eventful in a bullish manner for the nanotech industry. So yeah, I give the bulls a little bit here, but not much. So let's look at the fundamentals. When we compare the tiny ETF with the XLB, which is the materials spider ETF, then obviously one has a lot more volume than the other one, but that is to be expected. The expense ratio here is not really that crazy, 0.6%. Given how specialized this ETF is, this is actually a bit of a generous expense ratio. They easily could have gone like 1% based on the lack of competition. Year-to-date returns definitively underperforming the XLB. And we have very little data here on beta and the rest. We do have some data on the volatility. So let's go to the holdings. So 30 versus 29. So here you can see the companies. So Moderna is considered nanotech broker corporation. That's more classical nanotech. Lam Research, Taiwan Semiconductor. So some of these components are like, yes, it is true that there's something to do with nanotech here, but not necessarily pure play. but some of them are pure play. So I give the bulls a 1 here on the fundamentals. Yeah, there's just some value here, but the issue with nanotech and other types of futuristic technologies is that they are very hard to value. But given the floor that we are seeing in the charts, that could also suggest that there is some kind of value at this price range. Let's look at correlations. So we don't get anything on the weekly data points. On the dailies, we do get 88% with the S&P 500, 64% positive with the materials ETF. We do get 92% with XLK, the tech ETF. So the strongest correlation, and we do have minus 81% here with the dollar index. So the strongest correlation is actually with the XLK. So let's do a quick TA of XLK. So here is the chart. So this is, let me just draw it in. We definitively have, a rounding top pattern. There's also something a bit head and shoulderish going on here as well. So these are bearish setups. Then again, we have seen a substantial sell-off at this point. The best times to go short here was around here, around here, and especially around here. At this point, when you have seen these sell-offs, it gets less favorable to be bearish. Similar to how near these lows here, it is very favorable for the bulls, but as we go along, the risk for new bulls goes up. So here we have the other indicators. It's a bit noisy here for the XLK. Looking here at RSI, we are at RSI support. There have been some times where we have been lower, but on the daily data points, in a lot of occurrences here, you can see that this low on RSI and also here on the purple 20-day moving average PPO, this level has a tendency to result in rebounds. Here I am comparing no, I should do it this way, like that. The Nanotech ETF against the tech ETF. So yeah, clearly we have a very clear downtrend, lower highs and lower lows on the weeklies, on the dailies here. Yeah, this is bearish. We had a bit of a floor here, but we have broken through the floor, so Nanotech is clearly underperforming the XLK. If we compare the XLK against the S&P 500, which is the major index, let's go here to the weeklies. So in this case, you do have a bit of an ominous technical pattern. You have a shoulder, you have a fat head, and you also here might form a pretty substantial right shoulder. Clearly bearish, and this is also a very big head and shoulders pattern. So if it were to play itself out, it would definitively be over a longer period. Looking at the seasonality, though, you see that across all these time frames, 5 year, 7 years, and 10 years, leading up until 20th of September, technology has a tendency to outperform the S&P 500. Looking here at the RSI, we do see that we are at support. The previous time we tested this level was here, and then tech outperformed a bit. Way back here, it formed a key low and massively outperformed the S&P 500. So there's something interesting here. So I think I will give the bulls a 5 here on the technicals slash seasonality here of the relative performance review. So we end up with a 3.8 here in favor of the bulls. The key line in the sand is this triple bottom. As long as this triple bottom holds, then there's more reasons to be bullish than bearish. But if we were to lose the triple bottom, that would be very bad, because this is a bottom that should hold, and losing it at this point would definitively excite the bears, and it would also spook the bulls. So in that case, it could very quickly become self-reinforcing. And instead of having a triple bottom, we would have a ceiling, a resistance level at the place where we previously had a triple bottom. So we have some time left. So let's look at some of these. Let's do a quick technical analysis of some of these nanotech stocks. So let's go here to the weekly data points for Agilent. Now let's go here to the dailies. Yeah, so we are testing the green 50-day moving average. The green 50-day was relevant back here as resistance, but back here it was sliced and diced. So it's a bit of a noisy indicator. So it matters, but when it recently has been sliced and diced, it means that people will, trade it less because indicators that have been chopping people up, they will not be that popular. Then you have Cabot Corporation here on the weeklies. Yeah. We have found support here on yeah, you can see the purple 20-week moving average, but going here to the dailies, you can see that this blue 100-day moving average, it's a pretty big deal. It has been support in the past, but it also definitively has been some pretty good resistance. As such, yeah, the bulls currently have the upper hand because we are still above it, but the bears are very clearly incentivized to break it because if they were to break this level, that would be troubling to the bulls. So let's quickly look at these other indicators. Yeah, nothing really in particular except that accumulation distribution here is very strong. So there definitely are some people building positions here in Cabot. Next is KLA Corporation. Okay, like that, KLA Corporation. Yeah, so it seems to be in the Brazilian stock market. So I think that we should focus a bit on those that are easy for everyone to trade. That is Excelsis Technologies. That one is on the Nasdaq. Here you can see the chart. Since these lows back here, it's up 15,000%. That's a lot of fun. In this case, let's go here to the dailies to check. So you have this green 50-week moving average. So you see that back here, it was an extremely good time to buy. Here we were fighting that moving average ferociously. We currently are testing this one as well. In this case, the green 50-week moving average. Going here to the daily data points, then it gets noisy because we are actually now below the 200 daily moving average and the green 50-day moving average. Simultaneously, we recently here had a golden cross with the green 50-day crossing above the 200-day. So with Excelsis, there are tradable signals, but there are both bullish and bearish signals. So it's a bit messy, frankly. Here is mRNA. Yeah, in this case, I think you can see it yourself. We are testing some kind of horizontal floor here. We are testing it in the sense that we haven't really seen the bulls really commit to a rally. So it's a bit dangerous that the bears are back here again to test it. Going here to the dailies, we can see this floor being shaped here. So this is potentially a bullish level. Yeah, let's look at these other indicators. Yeah, accumulation distribution is showing that there are buyers. We are bouncing here from RSI support. It's interesting. Let's quickly look at Brooker Corporation. Here you have the red 200-week moving average. Extremely good time to buy, and we are very close to that moving average. So I think that of all the signals here, Brooker really is sending us an interesting signal. We also are at RSI support on the dailies. So interesting stuff here for Brooker. So we have done a deep dive into the nanotechnology ETF. We have also looked at some of the components of that ETF. And definitively, there are some interesting signals here that are a bit floor-ish. So yeah, I think there's more reasons here to be bullish than bearish, but as always, we need to have an entry signal and a stop loss. Of the stocks here, I think that broker is definitively sending a very clear signal. If that 200 week were to function as support, historically it's been a very good time to turn bullish.